let's talk about some examples of like, who is a house and package for?
Yeah, so there's it's all location based for me. So if you can, yes, there's boutique estates that do house and land packages. There might be 100 lots in that subdivision, even down to like 10, 20 lots. Your supply is low, right?
Yeah, so it's 10 and 20, which is really cool.
So if you can find little developments, they're actually not a bad little play in growth locations throughout Australia. Basically, CBDs are really good to try and find and buy in, but look around, look at the surrounding development potential of other areas. So that way you're reducing that supply risk, which is going to increase your capital growth over the time, and you also get the depreciation, the benefits of a new property. Just be mindful of who's building them. They tend to do sell for premiums because it is attractive. People can buy the land, do the development, they get all those benefits. So it's just those as an investment play, because they're like, for me to tick those boxes, they're in those inner city locations. The purchase prices are higher.
Because but they're higher because you're going to get higher growth because of the location, but also rent as well. As the property grows in value, you're going to get higher rental yields too. So you might pay a little bit more at the start, but you're going to get the ROI over the long term versus what maybe a not so good house and land package for investor is somewhere in the sticks that's 20 minutes, 30 minutes drive away from your friends and family and good amenities. And there's so much that, they're building maybe 200 homes or 100, 2,000 homes. And then there's a lot of land as well, a lot of land supply around that where other developers can come in and build another 2,000 homes. So that might be not the best house and land package for an investor. But maybe for somebody who's like, I just want to live in a nice new home and I want to have space and I want it to be quiet and I want like a quiet neighborhood and I'm happy to drive 15, 20 minutes to the shops each day for living in a really nice home that doesn't cost me too much in mortgage repayments. Maybe that's a good option for some people.
Yeah, I mean,
not as an investment property.
As an investment, we get some investors who have really high incomes. So you're looking at say 300 plus, and the tax depreciation benefits they get out of it are strong. They can afford the $1 million plus price tag on a new house and land package. So that can be a decent strategy as long as it's pitted off with other investments in their portfolio. It's not a bad option. Then you get sort of duplex pair players as well, which there's strategies around getting the two, selling off the one, and then getting good depreciation out of that one. It really comes down to location with good examples of house and land packages, and 99% of the locations where you'll find a house and land package are rubbish. So just do your research and reach out if you have any questions.
So somebody that is thinking about buying a house and land package as an investment, we've been through pros and cons of them, but what would be, your short list to DD, due diligence and research on what they should be looking for before they decide to buy a house and land package, other than chatting to us?
Do your location research, try and find those growth locations that, in Australia, that those suburbs are actually showing good signs of capital growth, and that means that there's low supply, high rental demand, low vacancy rates, short times on market, no future supply coming on board, good, obviously, infrastructure that's surrounding it, and it's a growing location. Start there. So the location research primary, and then if you're looking at that house and land package, making sure that there's limited lots being available. So I like to say no more than 100 lots to invest in. They're kind of where I'd start. Then you go further into, well, what's you got the developer, but that'd also be in cahoots with builders and making sure that the builder that's doing the build has a good track record. You can go through and analyze their businesses, how long they've been trading for is a good thing. Go and check on the Australian Securities and Investment Commission website. Just do your DD on them and ask them as many questions. Try and find referrals. Look at also past projects that they've done and go through and see, well, how they performed over the last 10 years.
Love that.
that's probably some keys that I hit on.
Yeah.
Examples of poor house and land packages. No doubt you probably figured it out by now, but on the outskirts of towns, low, I guess, data pointing to growth amenities. So you're looking at high supplies coming on board. You've got vacancy rates over 3%. You've got a lot of like surrounding farmland or infill land that can be developed to increase that supply over the next 10 years. Just don't touch that stuff.
Yeah, awesome. There you go, guys. Beware of house and land packages unless you are going to do your DD and find one that looks good. There's a lot of pros and cons in that. Everybody that is listening, thank you for listening. We don't typically ask people to subscribe or leave a review, but why not? Like, please, if you are getting value from this, like, subscribe.
Yeah,
leave
don't
a
ask,
review.
Yeah.
And leave a review and let us know like what you like about it, and we can do more of that. Yeah, and then hit us up with any questions. Probably powells.au.
Yeah, got some good feedback. Love the good feedback. It's obviously motivating, but like I'm also open to not so good feedback. Like there's no such thing as perfection in an imperfect world.
Feedback. Yeah, I like it.
But yeah, we're here to help and all grow together. So thanks for listening and keep involved, keep in the family. Chat soon.
See ya.